Welcome everyone to a new video of the Learn and Trade with Popeye. So today I'll try to explain some strategy to trade the trend reversal. We will try to see where to look for possible trend reversal, what to look for in case we want to catch a nice trend reversal, and how to trigger possible trade setup along with the invalidation and the take profit. So we will try to follow all the reasoning behind the possible trend reversal trade setup. But before starting with the video, make sure to subscribe to the channel, to leave a like and to leave a comment, as it will help to grow the channel. But without further ado, let's start with the trend reversal trading strategy. So first of all, we would like to understand where are the best places to look for a trend reversal. So basically, trend reversal is to try to catch that nice spot when the downtrend or the uptrend is reversing to the other direction. So whenever the market is going down, there will be a certain point where potentially the trend start to reverse and to go to the other direction. So this is usually a very juicy spot where to possibly get the leg on the other direction. A very important concept in order to understand the reversal, the trend reversal strategy, is that price is fractal. So whatever the price is moving in high time frame, let's say the one that I'm drawing could potentially be a weekly chart or a daily chart, in lower time frame, this chart is moving in a fractal way comparing to the bigger time frame. So if the first one I've drawn is the daily chart, the second one I'm drawing is potentially the 4-hour or the hourly chart that is moving something like this. Just to show in a different color, if the red is a big high time frame structure, within this big time frame structure, there is always a lower time frame structure that is moving fractally, but is anticipate potentially what the bigger time frame structure is doing. So this is very important to understand this concept and the multiple bias you can have within the different time frame. So this concept is important, and we will see later how it can be applied on the trend reversal strategy. So first of all, where we would like to look for a potential trend reversal point. Basically on well-known support and resistance level, or at supply and demand. So this is the Bitcoin chart. A very simple example is the first reversal we had on the very long uptrend that we had from January 2023 until March 2024. The first resistance, or the first place where this trend temporarily started to reverse, was actually a very well-known resistance level and was the previous all-time high. So whatever the price is doing, you have to understand that potentially, if you are not in price discovery, you will always have some support and resistance level. So historically, perhaps price moved in an uptrend like this, it came here to resistance, started to move down and to downtrend, then potentially again started to reverse at a potential support level. So the first places to look for reversal are well-known resistance for a bearish reversal and support for a bullish reversal. So where you do business is a very important factor on the success. If you try, for example, in a range or in a consolidation to look for a reversal, at mid-range, you are drastically decreasing your chance of success and also your risk-reward. Because if you look for a long down here, your risk-reward will be very well defined and in favor in case you catch the nice spot reversal like this. But if you look for the same trend reversal up here, first you will mess up your risk reward because will not be favoring you so much, and second, you will decrease your edge and your chance to be in the right place for a possible trend reversal. The second part are supply and demand that are similar concept to support and resistance, and supply and demand are very simply put, before a market structure break, like the one potentially Bitcoin had up here, we did have a market structure break that brought the price here, and supply was the logical place for this local uptrend to be broken and then to move down. So in this case, again, price is fractal. This is a downtrend. Locally, we did have probably a 4-hour bullish market structure. The trend reversal of this 4-hour market structure happened in a resistance level or in a supply level. So the first important part to remember, and then we can see with some technical example, that wherever you want to try to find a trend reversal point, you have to focus on doing this business either in support level for a bullish reversal, in resistance level or range high for a bearish reversal level, or at demand for a bullish reversal, or at supply for a bearish reversal. So this will dramatically increase on one end your edge on finding a possible cool spot for a trend reversal, but also will dramatically increase the risk reward ratio of your trade. Because if you try to short anywhere around this level here, your invalidation will be very far away from your entry and your risk reward will be messed up. While if you try to find your entry for a trend reversal very close to your invalidation at supply and resistance, your risk reward will be much better. So once we select the area where we want to find for a possible reversal, there are factors that we want to see happening, and this is after the where we look for a trend reversal is what we look for a trend reversal. And there are two indicators plus the application of market structure concept. So the first two are very simple indicator that can be used for momentum, and in this case for momentum reversal are volume, simple volume, and RSI. So the volume is the normal volume indicator that you can find in any trading platform, and RSI is the standard RSI relative strength index that again you can find in most of the chart. So what we want to see? We want to see volume declining because we are planning to reverse a trade. So in case price is moving higher and we want to catch a trend reversal, a bearish trend reversal that do like this, we want to see that while price is moving higher, volume is declining. Why we want to see volume declining? Because the volume shows us the strength, the power of the pressure that is moving the price. If the price is moving higher but volume is declining, it's showing that potentially the buying pressure is decreasing. So the strength of this move higher is decreasing while the price move up. So price move up and volume move down. The other factor that we want to see on RSI is that we want to see a divergence. So we want to see that while price push higher, potentially RSI push lower. So it's very important for the divergence that you always take the same side. So in a bearish move, in a bearish divergence, you want to see the price forming higher high, like in this case. So we take the top of the price action, and we want to see, to have a bearish divergence, RSI forming lower high. So we take top. On the bullish divergence, we want to see the opposite. So in a bullish divergence, we will have price going down like this, and we want to see RSI going up. So showing a bullish divergence. In this case, price is making lower low and RSI is making higher low. So in this case, no, sorry, this is a mistake. We want to see the price doing this. Always the same side. So the price is doing lower lows. RSI should start to make higher lows. So while for the bullish divergence we take the lows, remember that for the bearish divergence we take the highs. So price should do like this. Never, I see many people making mistake, never take the opposite part. So in a bearish divergence, highs versus highs. In a bullish divergence, lows versus lows. So to have both this divergence, you will have, let's say the case of the bullish divergence, you will have price doing, we said bullish divergence, we will have price going down like this. What we expect is that at a certain time price start to reverse and move higher, making this a bottom and a reversal. So we want to see price going down in this way. We want to see volume decreasing, so volume going down, and we want to see the RSI forming a bullish divergence in this spot. So let's try to look some practical example on the Bitcoin chart. Maybe lower time frame, it's easier, and here is immediately one. So price moved high, so price was forming higher highs on this way. Volume started to decline, as you can see here, and the RSI started to form the divergence. So you can see that price push high. Volume never push at the same strength, but actually started to push lower. RSI, instead of forming higher highs, started to form lower highs. So this was a very clear loss of momentum, loss of bullish buying pressure that then created this little range here potentially, and then the downtrend that followed. In this case, it's a bit particular because, okay, I took an example that probably is not super coherent to what we are explaining, because this was price discovery and there was not a clear resistance, but this level was actually a Fibonacci extension level. That is a system that I use for finding potential resistance level in price discovery, and in the case of that level we were exactly at the 1.618 of Fibonacci level. Let's try to find other examples so you develop some visualization. Okay, so probably we can use this level here, that was the former all-time high level at around 69k, and also here potentially we want to see the same. So price is moving higher, started to move higher from here, sorry, higher, volume from here, from this level, started to decline along with the RSI. So if you see physically, this level here was the high that we also had in the volume, that was this level here, and the subsequent high were with the decreasing volume and with the decreasing RSI. So again, in this level, we did get the drop and the move down. If you want to try to look for a bullish trend reversal, trying to look for something that is a little bit, probably is what we had here. Here there was a temporary reversal, that was this one. So price is moving down, volume is dropping, RSI shows a divergence, and we did get this little bounce here. So it was a temporary or low time frame reversal, but you can see it clearly that on the price we were forming lower lows. On RSI, we were forming higher lows, and the volume was dropping down. So exactly as you can see here, we were in this spot where we form the lows. The next lows, there was a decreasing volume along with a divergence on RSI. In this case, probably the support was a bit subjective, but I think was this little demand level that we had here, that was tapped on that last low that created this little price reversal. So now we can we know where to look for a potential reversal. We know what to look in terms of indicators, what to look for, and now let's try to see how to trigger a potential trade setup. I will take this example because it's the most recent, but you can look also on other time frame or another part of the chart. You can train yourself to what to look for. So in this case, we did have on the daily this divergence, the RSI. We were potentially in a support level or in a demand level of interest for a possible bounce. So now what we do, since a trend reversal strategy is a strategy that is fighting the trend, is always better to have some further confluence or some further trigger. In the case of a trend reversal, my suggestion is always to wait for a low time frame market structure break. So in this case, we notice all these possible reversal sign. So we are visiting demand. We saw a decrease in volume. We do see a bullish divergence on RSI, so we develop interest on a possible trend reversal trade. But what we do, since trading against the trend, and this is what trend reversal is all about, is a bit dangerous, is always better to wait for a market structure break in the opposite direction. So the trend is a bearish trend. We hope to catch a trend reversal, so a bullish trend reversal trade. So we look for a market structure break. The last bearish high is this, the last lower high is this lower high is broken. So now we are interested on buying this dip for a possible trend reversal. So once we break the structure, if we are looking on the daily, now we break the structure on the 4 hours, so in a lower time frame, we look for entries perhaps in demand or in Fibonacci level. Not sure what we can get here. This was the demand. Fibonacci, I'm not sure if they were front run or what. Fibonacci were front run, but let's say that we catch the entry on demand around this level, so then we can see better how to look for entries. We catch an entry. Now our invalidation, what is a structure invalidation. Let me clean the chart, because if this is truly a trend reversal, we don't want to have a further down move here, because in that case our trend reversal would be invalidated. So since the last lower low is this one here, our invalidation is just below that level. As long as that level is not violated, we are fine, but if this level is violated, there is no trend reversal and our thesis would be invalidated. So the invalidation would be just below the last structure that was created. So in an uptrend, if we trade something like this and we look for a structure, our invalidation would be above or around the last higher high. Our entry would be somewhere here, and our trigger would be this market structure break we had here. So it was a bearish market structure way. In a bullish, so this is what is happening here, in a potentially bullish trend reversal is the same. So this was our market structure break, this is potentially our entry, and this low here is our invalidation. In terms of taking profit, in a trend reversal strategy, our taking profit should be very conservative. Why? Because we are counter trading. Since we are counter trading and we based our trigger on a 4-hour potential market structure break, we have to be very conservative, because we cannot expect that from a 4-hour market structure break we are for sure getting a generational entry, and from this market structure break we will go straight to the moon. So our entry, our take profit should be very conservative. What I'm suggesting is always to have a take profit before the higher time frame market structure break. So now we enter on a 4-hour market structure break. The next market structure break would be potentially here on the daily, or here probably in the 12 hours. So to take profit before reaching there, because we don't know if this 4-hour trend reversal that actually happened will bring us also to the next time frame market structure break that is above here. So secure some profit in a conservative way, so to have lower expectation than a trend continuation trading strategy. To look for other possible example, so you familiarize with the concept and also with the visualization in the chart. We said that to go back to the reasoning, we say that first of all we want to look for trend reversal strategy at support or resistance level. So in this case we can use, okay, I can use two examples, but let's use it, sorry, messing up with the chart. So let's say that we want to use this form support and resistance level that was more or less here at all-time high. So we know that this is potentially a support level. So this level is for us a potentially interesting level for a trend reversal. So we start to look for the signs that we discuss about. So we want to see price going higher. We repeat. So we are at resistance. Price is moving higher. Volume is decreasing, and the RSI is showing us divergence. So we go in lower time frame and we look for potentially a market structure break. The real market structure break potentially happen here. This is a little bit higher time frame, so we are at resistance here. We finally get this market structure break here. Since we break the structure, we have multiple choice of entering the trade. If we stick to Fibonacci and supply, here the supply of this last move was this. So it's the last green candle before. Let me zoom in. The last. So this is the move that brought the market structure break. This is supply, that is the last green candle before going further down. And this is the Fibonacci golden pocket here in yellow that are all suitable level to look for the entry and the further continuation for the downtrend. So in this case, we got this top and we went down to make a further lower lows. There were potentially even entry here for this lower low, but just to use supply and Fibonacci level for possible reversal. So in that case, let's try to play the replay to see how this could have been played out. So we are looking for a trend reversal because we have the decline in volume. We did have the declining RSI. This is all in the daily. Let's remove the indicator. Now we want to try a potential trend reversal. So we did have the market structure break here, or whatever you want to look at technically also there. So now we prepare our strategy. So the bearish move that created this market structure break is this. So we draw our Fibonacci in this way, and we know that always we want to short above the 50 level. 50 level would be here. This is not a good area to short because risk reward is not good. We want always to short within the 1 and the Fibonacci golden pocket, that this is level here, because our short in this case would have the best risk reward from here up to here, simply because we would get a better risk reward. So we know that our short should be around this level. We can see that there is two potential supply or order block. This one is a green candle there, and then there is this little green candle here. So our trade could be developed around this level, supply and Fibonacci level. So our entry would be, let's make the example of the golden pocket. Our invalidation would be higher here. Our potential taking profit would be a continuation of this bearish range, and in this case we do also have a well-known support level down here. So since in a short, support is the level where we want to take profit, we would create this kind of trade setup. So we see then what happened. Then price visited that level and came down and tapped support once again, more or less where the idea of the trade was developed. So this is basically, let's say, the core principle, the where, the what, and how to try to execute it. Then you can also use other strategy for the entry and for the triggers. The let's say bonus reasoning also to use for trend reversal is also to apply some concept of ranges. So ranges are the neutral formation where the price is neither moving up or down, but is mainly going sideways. So as you know, price can do three things: going up, ranging, and going down. So price can only do these three things: uptrending, going sideways, ranges, consolidation, and moving down. So one concept that you can add to your trend reversal trading strategy is how ranges are behaving, because ranges are neutral formation as long as they range, but they can either be reversal ranges or continuation ranges. So what does it mean? That if we have an uptrend, price start to consolidate in a range and this range broke to the upside, means that this range, it was a reaccumulation range, so market maker ranged here a little bit just to accumulate more to move the price higher, so it's a continuation range, or ranges can be distribution range. A distribution range, a reversal range, a range that is moving higher, a trend that is moving higher, we range for a bit and then we start to break down. In this case, this resulted on being a distribution where market maker took profit and a reversal range. So you can have this in all the sides. So let me make a simple visualization for you of the kind of ranges you can have. You can have 4 types of ranges. So this is what you can find in the chart. You can have 4 types of ranges. In an uptrend, you can have a range that result in a continuation range or a reaccumulation. So this uptrend, we range, we continue to go up. This is a reaccumulation range and also a continuation range. Then in an uptrend, you can have a distributive range, also a reversal or trend reversal range. We have trended, distribution, and we go down. In a downtrend, we can have the opposite. So we can have a trend reversal range or accumulation. We go down, range, accumulate, reverse. Or in a downtrend, we can have something similar to this one, is a continuation range. So we go down, we redistribute for a while, and then we continue to go down. So these are reversal, bottom, the top and the bottom, and these are continuation range, both on the uptrend or the downtrend. A very simple to see now reversal range is the one that we had at the bottom on Bitcoin. Usually bear market are reversal ranges. So we did have on Bitcoin the uptrend, then we had the long downtrend, and then we had this clear reversal range where price mainly from downtrending started to accumulate for a while, and then finally it broke to the upside and started the uptrend. This is potentially a continuation range, so there was an uptrend, we range and we started to uptrend again, and unfortunately the one that we just lost in February in Bitcoin now appears to be a reversal range. So as you can see, we ranged and now we started to break down and to move down. When you see ranges giving you the direction, so breaking in one or the other side, this can be very powerful signal of a potential trend reversal, because price consolidated in uncertainty for a while. So market here didn't have a clear direction, but was ranging in uncertainty. You see, once this range is broken, then you understand that the trend is very clear. So in the case here, Bitcoin never, if we check the, TradingView driving me crazy. So what did we have? That never here ranges in this downtrend broke to the upside. So this was the last range of the uptrend that started to broke down. So we started to broke down, little consolidation. Then if you zoom, you can see on this range, little consolidation, breaking down, little consolidation with a deviation, breaking down, further consolidation here breaking down. So you see how in this downtrend all these ranges break it to the downside. Then finally here something started to change. So if you see, then you can see better in your chart when you have time, that from November 2021 until January 2022, so for more than a year, never a range broke to the upside, but all the range broke to the downside. So we did have some fake out like here, but then again we moved down. Here for the first time ranges started to broke to the upside. This was the initial high time frame trend reversal that then gave all the ranges that started to broke to the upside. Perhaps the range here is this. All this range then subsequently from the very first one that started to revert to move down. Why ranges are important in a trend reversal strategy? Because it's place where there is accumulation of distribution. So market makers do their job. So while it's cool to catch the exact top here and take this entry, remember that not all the trend reversal happen like this, but some trend reversal happen like this. Why this is cooler to trade? Because it's safer and gives much more clarity and much more time to understand that this is breaking and you can short somewhere here. That is exactly what happened back here in Bitcoin. So if this was our range, sorry, always fighting with TradingView. If this was our range, the range finally broke, it gave a retest, broke the structure, you see, gave a retest, started to move down, gave another retest and continued to move down. So whenever you see, let's say the bonus takeaway, whenever you see on low time frame or high time frame range is breaking down, these are always very good level to understand that there might be a reversal. These little ranges you can see in all the time frame, like the one we had very recently on Bitcoin. So this was the preliminary for our market structure that started to move up. Here there was the last range that started to break down, and this then gave the real trend reversal. So you can either try to play trend reversal up here or also on the loss of the ranges and consolidation. I think that's pretty much it. So just trying to summarize what we have discussed for the trend reversal trading strategy. So the first important part is where to look for a possible trend reversal. And the best place to look for a trend reversal are well-known support and resistance level or supply and demand level. Perhaps we can do a video in the future where we clarify better how to use supply and demand, how to determine and how to use. The second part that we want to use to see a possible trend reversal is to use a simple indicator like volume and RSI that will show us lack of momentum on the existing on predominant trend. So declining volume, bullish or bearish divergences on RSI happening at well-known supply resistance, support resistance, supply and demand level are good tools to use and to spot a potential reversal in trend. Finally, how to trigger, how to trade trend reversal is to look for lower time frame trigger along with the momentum indicator like volume and RSI, and to place stop loss or invalidation on the structure, so on the market structure, because if it's a trend reversal, the market structure should break on the opposite direction, and to have always at the beginning very conservative taking profit level, because we are playing against the trend, so our expectation should be limited. The bonus application on the trend reversal is to monitor on low time frame ranges and consolidation, because ranges and consolidation will help us and guide us to see if ranges are breaking to the upside, means that the trend is going up. If they break to the downside, means the trend is going down. If this range breaking is happening not in a continuation, but in a reversal, this could be a good sign, further sign of a potential trend reversal. So hope everything is clear. This was a very short, but I hope very condensed of information and explanation on the trend reversal. If you enjoyed this comment, make sure to subscribe to the channel and leave a like and a comment, and stay tuned for the next video on learn and trade with Popeye. Stay safe out there. Bye bye.